Hello traders, welcome to the Wednesday forecast. So we're starting with the euro and US dollar. We actually had some opportunities and some trades that did work out. So I did not take any trades yesterday, but there were a couple of flags on some pairs. We're going to go over those flags right now. So as I said, the schedule has changed a bit. I'm now focusing on doing the forecasts and the trade recaps on Mondays, Wednesdays and Fridays. If the market is really active, I will do it on Tuesday and Thursday. Otherwise, stick to the predetermined schedule. So this is the euro and US dollar, and here was the trade opportunity right at the top. So prior price action, as we were saying, was definitely stuck in a range, definitely range bound, and then price did make an impulse up, and then what we got is we got huge double wicks. Well, the first wick was big, but the second one was really huge, so that was a warning sign, and then a flag formation happened. So let me actually replay the flag formation so that you can see this a bit better. This would actually be the flag formation, and this would have been the entry candle, so you would have entered on this one. As we said, so we enter on the first bullish or bearish candle after the flag forms, depending if we are buying or if we are selling. So this is our first high, this is the first low, this is the second high, this is the second low. Price broke the flag line right here, retraced, gave us an entry candle. So there were actually a couple of warning signs about this one and a couple of reasons why I stayed out. First one, so the most important one, the prior price action was not looking that good. So we were coming out of a range. Usually when the prior price action is not looking that good, I'm definitely on the alert, and warning signs play a much larger part in the whole picture. So prior price action not that good. Second warning sign, just one impulse to the upside. So what I want to see in most cases to take a flag, for example, is I want to see at least like a 2 candle push, at least showing me that the price wants to continue and that it's not just a news candle or a one-off candle like this. So that was another warning sign, that there was just one candle. Another warning sign, this huge wick on top, which usually signals to us a range. And then another warning sign, I believe this is the fourth warning sign now, is a momentum shift in this pullback candle. So for me, this is definitely a momentum shift, because if you look at the size, it is much larger than all of these prior candles, signaling that maybe the sellers have gained some strength. And then also combined, this entry candle was really small and weak. So no real strength in the entry candle, really small. I don't know what's the name, I believe it's a pin bar candle or something like that. So the body of the candle is really small, and that's another warning sign that maybe the buyers have not stepped in to defend this level. And the final warning sign, and also a big one, it was Tuesday evening. So on a Monday, on a Tuesday, until the London Open 8 AM on a Wednesday, I'm being much more patient with the trades. I am taking the warning signs into account, and if there are a lot of warning signs, I'm definitely not taking any trades, because from my experience in backtesting, usually a lot of warning signs Monday and Tuesday, that combination, usually the trades fail. That's why I did personally stay out of this one. Again, on the surface, it looked like an okay trade, but when I kind of went through it, there were a lot of warning signs for me personally. So yeah, then price exploded to the upside. So you would now be in some really good profit. And currently I am looking to enter, but again, I'm seeing warning signs, double wicks on the top, aggressive retrace right here. When I see double wicks and this sort of an aggressive retrace, sort of a V reversal, momentum shift, I'm seeing clear momentum down, I'm being much more patient. So to be honest, I'm not looking for a flag right here. The only thing I would consider maybe is if it descends to the entry level would be down here, but I kind of don't really see that happening. To be honest, the best bet is to wait for the high or the low to break. So my best bet is to watch out for more momentum to the upside and then a nice flag or a nice break and retest trade. Of course, if it starts to ascend, then I know to look for a reversal. And if it gives us a V reversal to the downside, which is definitely possible, currently it is looking like it's going to possibly create a V. If it does do that, I'll look to sell like this. So definitely keeping an eye out on this pair. It is trending, definitely not a range bound pair currently. I am liking this momentum to the upside. I'm liking these legs. So let's see if we get some sort of an entry continuation type or a reversal. The most important thing is that the market condition on the euro and the US dollar is currently trending. For the euro and the Japanese yen, there was this reversal opportunity right here. For me, we were just stuck in a range. Prior price action was completely crappy. Very, very bad prior price action. I saw no entries here. I wasn't interested in buying after this candle. Although it's a clean close candle, prior price action still wins. The prior price action is still king and it looks like shit. So this looks very range bound, which is expected after this large volatility. We of course expect a larger range. To be honest, the only thing I'm looking for is a large impulse up or a large impulse down. I want to see some conviction either to the upside or to the downside. I want to see price clean up and start trending and the volatility to die down. I don't want to see this huge volatility. I want to see it commit in one direction. So this pair is definitely not on my watch list. I mean, I'm keeping an eye on it, but I'm not that enthusiastic about it as I am about euro US dollar. Aussie US dollar, we also had an opportunity to enter right here. So we got an impulse to the upside, then we got a huge wick, and then a flag did form. But again, very similar to the euro and the US dollar. Lots of warning signs. Prior price action, pretty crappy. Coming from a wide range, really not showing us a direction. Then we only get a one impulse push up. What is that? Is it news? We don't know, we don't care. But I know that only a one huge candle push makes the trade a bit less high probability because it can be just an outlier in all of this price action. Again, what I would like to have seen is one more candle go up and close bullish. We didn't get that. Then we got a huge wick. Then we saw a bit of a momentum shift down. And then our flag formed. So this is the first high, first low, second high, second low. And this is the entry candle of the flag. Again, the first bullish candle after the flag forms. For me, didn't take it. Warning signs were prior price action was scrappy. Just a one candle impulse. Slowing down of the momentum. This is really important also to spot. Another warning sign, you can see that it's just breaking, leaving wicks. That means it's slowing down. Now, it's not that we don't take a trade when we see it, but it's just one of the warning signs that is telling us, hey, maybe the momentum is slowing down. This flag is not looking that clean. I'm seeing a bit of a momentum shift right here. So, and possibly here. But what was also really bad is this wick, huge wick to the upside, showing me that the sellers may still be in control. So now we have two huge wicks, and then the entry candle was not looking that clean. It wasn't like a bullish candle like this one, for example. It also showed a wick to the upside. And it was Tuesday evening until London Open on Wednesday. I'm being a lot more patient, and if there is any warning sign, most likely I'm staying out. That is the reason I stayed out of this one. If this was maybe happening on a Wednesday or a Thursday or a Friday, I still think I would have stayed out. There are just too many warning signs for me. The biggest warning sign for me was that prior price action was not conducive. If this setup happened like on top of a trend, if we were trending or the prior price action was forming a high probability pattern, I would take this flag. But because we were coming out of a range or from a range and just this one push to the upside, slowing of momentum, prior price action was definitely not good. Now it did explode up, so you would be in some really nice profit. If you took it, congratulations. And now, most probably I'm not taking a flag here. The reason is kind of looking like a momentum shift. I mean, definitely seeing a momentum shift right here. So also we got this a bit of a wick, not a really big wick, but it is a wick nevertheless. What I don't like is that it's kind of creating a sort of a V reversal. So I'm not saying I will not take a flag here, but most likely I will not. So because it just doesn't look that good. So for the future, I am waiting for a push up like this, break and retest to the upside, or maybe a nice break and retest right here for it to retest the most recent high, maybe a flag for a up. I just want to see the momentum continue to the upside. That is what I want to see. We can also start to ascend, then I would be more careful, more patient with an ascending structure like this. Or we can get a V reversal and we can shoot down. In that case, I will be looking to sell, of course. So the same scenario as the Euro-US dollar. I like this price action. It is starting to trend. Definitely not stuck in a range. I'm seeing large momentum here. The momentum then continues. Another good sign. Let's see if we get an opportunity. Aussie Japanese yen really range bound, as are all of the Japanese pairs. So same as the Euro Japanese yen story. We were stuck between the most recent high and the low. We broke the high, retraced immediately. Huge warning sign. I just want to see a nice uptrend or a nice downtrend. Then I will look to get in on a trade. Currently, I see nothing here. It's looking very, very bad. So we don't even have to analyze it because there's just nothing to see, to be honest. Now for the pound and the US dollar. So for this one, there was also a flag opportunity. We had our impulse. Prior price action was range bound, definitely. Was not looking that good. We also gapped right here, so that was also kind of telling me the price is not that good, but I really liked this impulse. And then our flag formed. Let's see the candles right here. This would have been the entry candle. Let's see the open, 572, the close, 81. Yeah, so this would have been the entry candle. Again, for me, I did not take this. And I would have personally been stopped out. I know some people may have used a larger stop loss size, some traders, and they are still in, but I would have been stopped out because I'm using a 15 pip stop. So for me, I know that on the pound, usually the only flags that work out, according to my backtesting, are larger, wider flags that kind of range for a really long time. I mean, they go like this, for example, they go down, they go up, then they descend. They're really wide and large. Those are the ones that work out. These sort of quicker ones, I don't have a good experience with these ones. That's why I'm being really careful. So my warning sign was, well, first it was Tuesday, so trades usually don't work out. Then we have this big wick and we have this huge wick. So I wanted to see a bit of a range. We saw a range, not really enough of a range for me to be honest on this pair. We then broke the low, retraced. Entry candle was really small as it was on all of the pairs. So when I combined all of the factors and according to my backtesting, flags don't really work out. I'm kind of not taking any flags on the pound except if they're textbook in their formation. I decided to stay out and I would have been stopped out for 1%. So saved myself 1% here. But for anyone using a larger stop loss size, for example, maybe a 40 pip, they would have still been in, I suppose. Yeah, and then the price did shoot to the upside. So if you were using a larger stop, you would have been in. I would have been taken out. So for me personally, it's good that I followed my plan. That is the exact reason why I said that I'm staying out of most of the flags. They just take me out, according to my backtesting at least. Okay, so now this is looking really, really good. I really like this price action, as I like it on all of the dollar pairs. Move up, pause, we continue. Clear, large momentum. The dollar is losing strength. Pairs are rebounding. We did get now a large wick to the upside. That's a warning sign. I'm waiting for more of a range. I'm not taking a flag here if it forms right now. I want to see that wide flag formation. This I don't like. What I would like to see is for this to continue, give me a nice break and retest, or another impulse break and retest further up. I would definitely take that. I would be very interested, especially because of the prior price action. And that is about it on the pound. I mean, we can also get a V reversal. Range push down, then I would look to sell, of course. So let's switch to the New Zealand and the Japanese yen. So we're here on NJ, and it is stuck between the most recent low and the most recent high. The analysis is the same as on all of the Japanese pairs. I am looking for a large impulse down or a large impulse up. I'm looking for a trend. I'm looking for it to break out of the high or the low with large momentum. So that is it for the forecast. I'll see you guys on Friday, and hope you enjoyed, took some value. Keep an eye on those dollar pairs. They are trending. Japanese pairs asleep, but there is definitely an opportunity on the dollar pairs. If they continue going up, I'll be looking for an entry. Do stick to your plan, don't get FOMO. And yeah, that's about it. It's now the latter part of the week, so we can kind of ignore some of the smaller warning signs, which is good for taking trend trading trades. That's it. See you guys in the next one.